Some analysts have predicted that oil may fall as low as $76 per barrel in the coming 6 months. This is a big deal for Alberta. The oil and gas sector represents 50% of Alberta's economy. This includes direct exploration and production, as well as other economic spin-offs from corporations that provide services to this sector. Not to mention the boost retailers get from increased spending brought on by high oil and gas wages. So when oil prices declined to around $80 per barrel during the past few weeks, giving way to speculation that these prices might stay put for a while, many Albertans became rightfully concerned. Some factors influencing the current price slump include less demand for energy as a result of slower growth in Europe and China, which together represent close to 40% of the global economy. Excess production coming from OPEC, led by Saudi Arabia, is also a concern. An increase in U.S. oil production and the possibility of excess supply in North America also has investors worried. While oil prices are averaging around $99 year to date, sustained prices of $70 to $80 per barrel could have a big impact on Alberta's economy. This is because, from a provincial perspective, the government based its budget on $99 oil. Every dollar decrease in oil prices reduces provincial revenues by $220 million. $80 oil for the remainder of the year means an unanticipated shortfall of over $2 billion. And it's debatable whether government has revenue saved up to cover this kind of loss. If prices go so low that they run out of savings, the province would either need to borrow or raise taxes to meet their budget. And this will cost Alberta taxpayers. From a business perspective, lower oil prices mean companies are going to think twice about investing. While most capital budgets have been committed for this year, $80 oil means companies could adjust their spending plans downward for next year. The most significant impact will be on the marginal producers, those unconventional plays that need a higher price to make a profit, which can be anywhere from $70 to $90 per barrel. This ultimately could lead to a slowdown in our economy, particularly into 2013. But there is hope. We were in this exact place last September, and oil prices rallied to finish the year at $97 per barrel on average. It's also important to note that until recently, oil prices have been strong, so provincial coffers have been slowly filling up and the government's budgeting is on track still. In fact, this week the province announced that savings and revenues were higher than anticipated this past year, which means that they have more cushion for the coming year. We live in uncertain times, and $80 oil could just be a blip on the radar rather than a long-term trend. The challenge for Calgary business will be to weather this uncertainty and deal with the decline in spending if companies and consumers take a wait-and-see attitude and decide to hold on to their money. I'm Ben Brunnen, and this has been Breaking It Down for Business. I'm always interested in providing commentary to help your business make sense of the latest economic developments. If you have an issue that you would like me to break down, please email media@calgarychamber.com.